Rara Rasputin, lover of the Russian queen. There was a cat that really was gone. Rara Rasputin, Russia's greatest love machine.
So I guess we're live with the great sound of.
Okay, let's start.
Okay, hello everyone, and
Okay.
thanks for joining our. We do have a stream. We do have a very interesting stream almost every 2 weeks, almost bi-weekly. And today we will have a stream with the four of us. As I just want to remember that we have just a friendly conversation about an interesting topic. So we are four of us today. I'm Inal, Jay, Sten, and Alex or Aleksei. How should I call you, Alex or Alexei?
As you wish, my darling.
Okay, I'm gonna call you Alex. Shorter. So, as always, we will, as I already said, we will discuss an interesting topic. Today, we'll talk about blockchain interoperability. So, we'll try to answer the question, is it the next big thing in the blockchain industry, or this is just an achievable dream and this is just something we do not need, maybe? So, this is the main topic we're going to discuss. And guys, as always, I'll ask you to just introduce yourself in a couple sentences. So, Jay, let's start from you.
Yeah. VP of Marketing at Avalabs, building Avalanche, the open source protocol, primarily for smart contracts applications. Been there for about a year, currently working on making the platform as performant as possible. And also, I would say interoperability is a big thing that we're focusing on. I think we're still scratching the surface as a collective whole. So, well, I think we'll see what we all think about where this is going. Maybe a little bit different from, I think we talked about NFTs last time, so a little bit more straightforward, perhaps.
Yeah, I hope so. And thanks for joining, Jay, because you already have a fan base in the Waves community. So people every time ask, will Jay join the stream or something like that? So thanks for joining. Stan?
I think people grew tired of Russians and cats. So I think they're ready for some fresh blood. Hi, everyone. My name is Sten Laureyssens. I'm still strategic advisor for the Waves Association. I've actually lately been taking a deeper dive into like the tech side. After our discussion on NFTs, I actually found some, let's say, rejoiced interest, and I've been diving into NFTs a bit more. And lately also sort of just looking on where we can go next, maybe also for this conversation on like interchain and what the next big thing, what the next big cycle will be. And maybe we'll touch on that a bit today.
Yeah, I guess, I think that we will do that.
Yeah.
We'll touch it for sure, yeah.
I'll pass the torch on to Alex, or today, Mr. Rasputin.
Alex, yeah, go ahead.
Hello, guys. Hello, everyone who is watching. I'm Aleksei, co-founder of Neutrino protocol, which is algorithmic stablecoin. Recent year, me and my team is working on cross-chain interoperability, the protocol called Gravity. But recently we noticed that we have to bring some new economy into that cross-chain solution, and this is a new project called Graviton. So my focus right now is mostly on connecting different ecosystems together and build products on top of that. So I think it's like crucial part for the whole industry.
Thanks for introduction, guys. So my name is Inal. I'm always kind of host. There is no host on our streams actually, because this is just like friendly conversation. So my name is Inal, developer advocate at Waves and Waves Association board member. So yeah, I'm a big fan of interoperability, and I'm a big fan of different blockchains. I truly believe that there's a space for different blockchains, not only Bitcoin and Ethereum or Ethereum. Yeah, let's start with it. Let's start. The very first question I do have for you guys is that how do you guys think in 2021, do other blockchains have a user base first? I mean, Bitcoin, Ethereum, they're like two big players in the industry. All other blockchains, they're trying to catch up. But do they have like user base, really good user base?
Don't forget Dogecoin.
Okay, Dogecoin, three blockchains. do we really need all other blockchains? That's the main topic. Before we talk about interoperability, I want to talk about, do we really need different blockchains? So my take on that is that there are different blockchains, and we need them because let's say any blockchain, like every blockchain, is good for something. Like, for example, I don't know, Bitcoin is very good as a store of value, but not as a payment solution or payment. It's not the next big fintech thing with a great adoption. It's just like store of value. I don't know, Avalanche is like, maybe it's what is it, Jay? It's like a solution for everything, or for, I don't know, for payments to, I don't know, banked and unbanked or something like that.
Yeah, I think we're testing that out. I think everyone is testing. I don't think anyone really knows, but they'll claim what everyone says, I think. So Bitcoin does the same thing. You know, Bitcoin maximalists, initially it was basically propped up by the Silk Road, and it was maybe better for anonymous transactions. But as we all know, it's not really anonymous as long as, you know, it's all the on-chain data is visible, and it's pretty easy to actually track how payments travel from point A to point Z. And so that's kind of the, I guess, like people finding the convenient narrative. So at this stage, a lot of projects, including Avalanche, we're just following the signals. And there's a lot of signals for Avalanche. There's smart contracts, there's payments, there's kind of the enterprise deployments too, because you can create private and permissioned blockchains on the actual platform as well, and kind of everything else in between. I'm sure we talked about it before in previous calls. And what's interesting about your question, Inal, about do we see use cases with every chain? I think we're going to still see many chains exist. And that's highly dependent on if interoperability can be solved in a seamless way. Because right now you have bridges. It's kind of like the way I see the bridges being built right now is it's like there's a huge river, and people are just looking around for supplies and just putting it together. And it's going to work, right? But it might be really expensive. It might be also fairly dangerous and risky. There's a lot of different things that exist. So trustlessness, I feel like, is the end goal, but trustlessness also in a seamless manner. So if someone is able to say, okay, I'm sending native ETH, and maybe wrapped tokens are also going to be something of the past too. It's just a little bit too complicated for non-crypto people. But if you send native ETH to like native BTC, and you're just able to transfer it seamlessly without understanding the underlying technicalities that are going on, especially with the bridge, for example, then that's great. Like, and I think the last thing I'll say is the sticks and stones reference of where we're at now. I think a lot of the ecosystem projects are facing that, especially with the non-trustless bridges. There has to be like trusted relayers, for example, and multi-sig contracts. I think that's kind of like if you're driving through a toll, and imagine if you had to talk to the toll operator, but you also had to talk to 4 other supervisors before you got through the toll. Seems really inefficient. I get that there has to be trust made, so that's kind of like something that I'm hoping that will get ironed out some way or somehow. And if that is able to get solved, I think interoperability is really kind of the sky's the limit. Anyone can really build chains. There might be community level chains that exist. Let's say, I don't know, like maybe a blockchain that's just for people that have one common interest, for example. I'm not really sure what that could be, but then that could work in tandem with like Bitcoin, which might be digital gold still, or may not be, who knows?
Yeah. Guys, do you have anything to add?
Yeah, I can add something. So you mentioned that we have 3 main chains right now, right? Bitcoin, Ethereum, and Doge, right? Bitcoin is a store of value, Ethereum is kind of supercomputer, and the Doge is a meme machine. The thing is, the crypto was created for digital cash, right? None of those 3 aren't using for payments actually. So something just went wrong, right? We need some chains for actually payments and for using for everyday people. And of course, we need more chains because with different chains we have different levels of security, different level of the cost So there is more security, but it is more expensive. If it's just less security, it's less expensive. And people they can choose what kind of like platform they can trust or use, or even not people. Sometimes I'm thinking that regular people, they don't even care about which chain is using, because it's same as if you have like a good website. People interested in there is a site is hosted on Amazon or Google Cloud or whatever. It doesn't matter. For users, it doesn't matter. And in that thing, we have to bring value to users without too much focus on like what kind of ecosystems it is working here. But anyway, we are in the growing stage right now, and different chains, they have different pros and cons. And the one important thing is we have to bring economy we have to bridge economies between different chains together, because only this thing can help projects to choose chain. Because if you're choosing chain, there is a lot of bridges to another chains. You don't have so much opportunity cost. Versus you have chosen the project, you are building a product on that, but you don't have any integrations with another chains on another wallet or the whole ecosystem. So here interoperability is actually one of the most important steps in industry to fight against tribalism and work together between different projects, integrations, wallets, etc. So of course we need it. The more we have, the more choices we will have, the better we'll grow.
Got a point.
I'll add to that, both on what Jay and what Rasputin have said. Jay, you mentioned Silk Road, and I think I'm not sure if anyone has seen has recently gotten into Formula One, but Netflix has this since 3 seasons, has this Drive to Survive, super almost like reality type of TV documentary about Formula One, and there's a lot of controversy around it, where a lot of people say, hey, like you're picking little figments and you're adding them together, and it's not really what Formula One is about. But then you get this response from a lot of the teams saying, yes, it's maybe not all truth and it's not really what Formula One is about, but it's drawing so many people in that we're not here to complain. People will find their way into like what Formula One is about, but it's a great funnel of a massive audience. And I think probably Dogecoin and people like Elon Musk, they are what Drive to Survive is for Formula One. They're not necessarily right. They're not necessarily representing the things that blockchain is really like trying to strive for, but it's bringing in so many people, and they will find their way. And as a matter to what Aleksei also said, like it's, yes, we need people to find a good way to like use it for payments, like use blockchain for payments. We don't necessarily have that currently. But I think in this whole like adoption process, we need a few things. We need large audiences that step in. And I think Dogecoin and people like Elon Musk, they're doing precisely that. It's probably onto those people themselves and the industry to convert them and say, okay, like this is what's really important. This is why privacy is important. This is why Bitcoin is not the right chain for this. And I think probably we will have to find a good balance between, do we find a good way to send native ETH into a native Bitcoin address without all the hassles, without letting, and that's kind of the level of adoption, like, can you let blockchain be integrated into your daily lives without your grandmother knowing that she's using blockchain to pay for, I don't know, like automatically buying her groceries through her, like, I don't know, her phone, or ordering coffee beans from her coffee machine. Like it's that level of integration, and I just don't think that we're there yet, because people tend to, and that's what I see like on ETH DeFi, and Jay, maybe you can comment on that, but people have the tendency to stay within their habits, one for safety and one for like, this is what I'm used to, and you can still lose your money if you send your token to the wrong address or you do something wrong. So people have that tendency for safety, but they also have that tendency for continuing to make money where they have made money previously. That's the whole Coinbase effect, the whole Binance effect, the whole, I don't know, curve effect. Like there's people who don't necessarily change. And I think even though Binance Smart Chain is probably the first to really like break that, I do think that we're seeing similar steps into things like Avalanche and there's a few others like Solana, etc. Jay, do you think that we're in a stage already where we're breaking that habit sufficiently for other, because there's, I mean, ETH fees is a perfect example. ETH fees are enormous. There's better alternatives out there. Why don't people necessarily make that switch? Is it a matter of habits only, or do you think it's also a matter of like seamlessness of experience? Like what's your take on that?
Yeah, I think it might be the habit point, but also if you look at the size of DeFi, I think it's only around like 2 million people or something like that, really small. So I think the 2 million folks that are in it, I think us included perhaps, we all have kind of like tinkering mentality and have been pushing through crypto for years and years and years. So we know how it was like when you had to write your private key, like initially on the piece of paper, and you were kind of like, is this right? I don't know. It seems like we're going backwards. But then you look back and you're like, okay, actually that is the right methodology. But how do you convince other people who are very digitally native in Web 2 that that's the correct way to do it, instead of like, oh, I'll just take a screenshot of my private key and I'll put it on my desktop. Like that, I hear that all the time from new people, and you're like, you just sit there trying to take a deep breath and you go, all right, how do I explain this one? And then you try and like, I mean, I honestly, kind of side tangent, the best explanation I've heard is it's like a Horcrux in Harry Potter. You have to hide separate parts of your key, and that's how you stay alive. And your kind of self-sovereign's finances aren't going to get totally tapped in by malicious actors. But
yeah, I'm going to steal that one. It's a good explanation.
Yeah, exactly. I'm like, just so you got, everyone loves Harry Potter, it seems, and you just have to keep it secret. But I think UX is still something that needs to be improved. I personally have a huge passion in UX. I think mainly because I'm like a technologist at heart. I love how technology has changed the world time and time again. And since that initial fascination, as crypto started to become bigger and bigger, that also bled into crypto. And then because of my fascination with tech, you also end up using everything, like always an early adopter at like random things. I remember when Uber first launched in New York, the first day, I was like the first person to sign up. And I remember I was like, this is kind of weird, but I think I can jump in someone's car and hopefully that I'll feel safe. That seemed like a little bit of a hurdle, but same idea. Crypto is like, all right, well, you have a decent amount of value coming into these chains. You also have applications now, at least when Ethereum introduced it, and then other chains started coming into it. So what does that actually mean, right? Like, it's like if you looked at the App Store when iOS deployed, and the only thing you could really do is like get your phone and you could do like the fake drinking like app, which does absolutely nothing. But I'm sure we all downloaded it at one point in our lives. So it's kind of, we're still at that stage. And I think we're still trying to push through the hump of how to really make it easy for everybody to use. Not even just like the grandmother example, like you said, Sten, it's even just like the people that are just below the crypto, like evangelized folks, like the people on this call, maybe like the people that are just a half step down.
Before we continue, I have to interrupt you guys because I totally forgot about one thing. I forgot to announce one important thing for our community. So my colleagues just pointed me that I have to say one thing, because today we have a kind of competition for all of our listeners. So you can win one egg token. So Jay, maybe you haven't heard about the egg token, but our whole community knows about egg. So we have a competition where you can win one egg token. So you just have to send a list of the waves and gravity partners that were mentioned during the stream. So the first 100 participants will get the reward. I mean, 100 participants with the right answer, of course. There will be a link to a form where you can submit the list of waves and gravity partners and your waves address, so you'll get one egg. By the way, all these eggs and ducks, all these Duck Hunters game is about NFTs. We have discussed during the last stream, during the last call. So you can watch the stream about NFTs. You can find it on our YouTube channel. So good luck with the competition, guys. And now let's go back to our interchain and interoperability discussion. Honestly, I want to switch the discussion to a little bit to a bit different direction. Okay, we can all agree that we need interoperability, we need different blockchains, all this stuff, but do we really need bridges? We have mentioned a couple times that there are bridges. As far as I know, almost all bridges are centralized. That's the first thing. Their user experience is much worse than with centralized exchanges, because if you want to move tokens from one chain to another, that's the main use case, I guess, for interoperability. Then you can go to Binance or Coinbase or wherever, to almost any centralized exchange. You can just swap tokens and you will get almost the same result as the majority of bridges. So do we really need decentralized bridges? That's the main question for me. Do we really need it, or centralized exchanges is enough?
May I answer this question?
Yeah, sure. Go ahead. Just tell me. You should not
ask
about. Just start talking.
Yeah, we're just working for a year, and the whole year we are building the bridges and the protocol, which is actually quite sophisticated to protect any kind of malicious attack, etc. And we see success from like Binance bridge to the Binance chain, or centralized bridges adoption. And sometimes we feel, the crisis of existence, like why we are doing this, why we are thinking about like decentralization and different kind of protection mechanics. If you just create some kind of multi-sig thing, and it will have enough enough level of trust, and at the same time secure to use it. And it's actually a good question, because it's same question as you can ask for the whole blockchain story, because we have centralized chains, like literally with the one node or like two node, and we have Bitcoin and Ethereum, and the question is reliability. So of course, the first movers, they are centralized solutions, because it's much more, it's easiest thing to do, really. Like centralized bridge is just two accounts on different chains, and some process on your like Google Cloud or Amazon.
And that's what we have talked about, actually.
Yeah, and it's actually really easy to do, but the problem is you have a lot of risks here, and the thing is. So right now, bridges almost not adopted. I mean, if you will compare with the trillion market, they have, I don't know, a couple of billions right now, right? I mean, including custodian solutions like Wrap BTC or Rent BTC, or like multi-chain XYZ bridges or Binance bridges. They together have like 10 billions, probably not more. It's just small part, right? But even here, if we have more and more solutions, people can do choices. Like, of course, you have one centralized bridge, but there is always the risk of attack, and admin of this account can somehow lose the keys, or it can be somehow. It's just a risk. Of course, the probability is too low, but there is not so many cases, and the more cases will be, the more exploits we will find, the more demands on the trustless services we will have. And right now we are too early. And another thing is chicken egg problem. Right now bridges are not using, actually. I mean, except the biggest centralized bridges like Binance bridge for Binance chain. It's just it's their chain and their own bridge, so they can move liquidity there, or couple solutions like Rent BTC bridges or multi-chain XYZ, which is just started. but still it's not. It's almost no there is no usage still compared with the whole DeFi activities and the trading activities and swaps, etc. So we have bridges. People don't care because if you are focusing on product, people don't care how it works. But the more exploits we'll find, the more demand will be. Same as for decentralized exchange. And another thing is, it's not about using Binance as a bridge, because if you're using Binance as a bridge, you have KYC, you have compliance stuff, you have a lot of things which is not good, especially if you're gonna automate your product. And here we have non-KYC bridges, which is also nice to have. And the thing is different. The thing is adoption and the use case without KYC, because Binance or another crypto exchange which has this requirement cannot be used for majority of people or your own infrastructure. And you have like SLA, you have a lot of things which depends on something, like whatever happened with the centralized exchange servers. If you have distributed and decentralized, you have much more reliable solution. And if like a couple of nodes they're going offline, you still your system is still working. So the more usage of bridges we will see, the more demand on distributed or decentralized bridges we will have. But right now it's not the time for that.
I just have a couple of words to add. First of all, I'm not sure that, you mentioned that people do not care about is it centralized or decentralized. They just want usually just to trade or just to take some profit. That's the only goal, at least for now. Maybe in the future it's going to change, but now they just want to take profit and that's it. So, and the easiest way, the cheapest way to do that is to use centralized exchanges. That's the first thing. The second thing, like we do have a bridge, for example, between, I don't know, Avalanche and Ethereum, or Avalanche and Waves. But why should I go that way? Because if I'm just a user, I'm not a developer, I do not have enough expertise to understand, is this a bridge centralized or decentralized? Usually, I can see a user interface where, I don't know, I have to click 5 buttons on the user interface, 10 buttons in my MetaMask, and 15 buttons on my Waveskeeper. So like it's there are many barriers if you want to use bridges usually compared with centralized exchanges. So first of all, I do not care about risks usually because I want to take profit now, not later, not like, I don't know, in 10 minutes. I want to take it now. So I need it to be fast. That's the first thing. The second thing, it's much harder to use bridge. And the third even thing is that I'm not sure that as a user, I would like to even, I don't know, I don't want to transfer to different chains. Usually I just want to transfer to Ethereum and from Ethereum. Let's be honest, right? And many projects, they build bridges just to Ethereum and from Ethereum. And usually when we talk about interoperability, we just talk about a bridge between Ethereum and any other chain. It would be the same with Bitcoin, but Bitcoin doesn't have smart contracts, so that's the problem. But anyway, usually when we talk about like trading or something like that, we just want to go from Ethereum to Ethereum, and we just need kind of bridge there. I cannot understand as a user, is it centralized or decentralized? So it's not a good case where I have to, I don't know, sell it. Hey, this is decentralized. Users just don't understand it. And the next thing, just to, I don't know, maybe to argue about, is that usually when people build a bridge between Ethereum and any other chain, they just want to get some small, tiny part of Ethereum's community and Ethereum's users. That usually looks like just a way to get some attention, some traction, some adoption, just a tiny fraction of what Ethereum has. So for me, bridges, interoperability sometimes look just as okay, let's build something. Let's try to get users from the Ethereum network because that's the only network with good activity. And at the same time, I have doubts that we really need bridges between Ethereum and any other chains because we do have centralized exchanges. So what do you guys think we can expect in the future with all of that in mind? I mean, will users care about, I don't know, risks with different bridges? Will we see interoperability between different chains, not only from Ethereum and to Ethereum, but between other chains? And will we see users who actually want to move their funds, their capital from one non-Ethereum chain to another non-Ethereum chain? Will we see that? And the last question for me personally is that, let's say we do have users, I don't know, millions of users on Avalanche, millions of users on Waves. Will they be able to use dApps from one chain in another? I mean, to call a dApp, I don't know, to call AMM dApp in the Avalanche from Waves account. Will that be possible? And will users really need to do that in the future? How do you guys think? Like, many questions, I understand.
Yeah, I think pulling something that Sten said earlier about people being hard in their ways, I believe that there will be a need for bridges because you're going to start somewhere. And it's not guaranteed that you start on one chain or the other for a variety of reasons. It's kind of like the banking system. I'm just going to reference the US one because I know it well. But you have all these different banks. There are probably banks that actually just give you, let's say if you have a savings account, the best interest rates. But we all know that the best thing in the category or the best thing in the industry doesn't necessarily win 100% market share, because maybe there are other things that people care about. Maybe they're not super logical about the interest rates, but they're instead looking at where are the branches. Maybe it's as arbitrary as, oh, I like the color blue, and because JP Morgan Chase has a blue logo, I'm going to pick that. Same with Waves. Waves is blue, so I'm going to pick that too. And you're going to have these choices that people make so long as there's that option. And then they might all of a sudden be in that ecosystem, and think about how annoying it is to try and switch your bank account. Like you have a lot of funds in one area, and just transfer it over. Like for any person that isn't willing to go through the motions, it probably takes a minimum of like a few hours to just like call the branch, tell them to wire all the money, all these things. And the more money you have, the more difficult it is. So I think there will be a use case, at least for the foreseeable future, of bridges because of this demand. There's going to be liquidity that's just going to be fragmented, and people are going to want access to other things. I think the other thing you said, Inal, about just about making it like very seamless, and maybe it's something that is only pertinent right now to the really hardcore developer and technical community because it's really niche. But if you're talking to like a random person who just bought Bitcoin yesterday and then all of a sudden went into a smart contract platform, they're probably not going to care. All they're going to care about is the experience. So maybe it's not so much nuance like decentralized and centralized, like that's not the terminology they'll be using. But if you think about trusted bridges, where they're perhaps relayers, people or organizations who are processing these transactions, maybe like a validator set, something like that, then they're going to see contract calls that happen more than once. So if you have, I think an example is on the Avalanche Ethereum bridge, one of them, you have 5 distributed relayers. So you have to call them all, and that gets bundled into the fee. And all of a sudden they're going to compare that experience, say like 5 relayers versus 2 relayers, for example. And they're going to be like, wait, so how come the 5 relayer experience costed me $200 US, and then the 2 relayer instance costed me only 100 relayers? We all on this call could yell on the mountaintops, be like, it's less decentralized, like all the stuff that I think all the crypto heads keep screaming, but no one's going to care. It's not going to matter. I think the cost is going to matter at the end of the day, at least for the most part. And that's why you're seeing like the Binance Smart Chain, I feel like, is like the villain in the space a little bit, because everyone's like, oh, well, look under the hood. And I'm always kind of sitting like, yeah, sure, maybe, but no one really cares at this level. The only time people will care is when something catastrophic happens. And that's when like their eyes are open, illuminated, and it's kind of like the Plato's Cave allegory. They're going to be like, holy shit, I shouldn't have trusted maybe like 5 nodes to really manage my finances, something like that.
if we talk about the risks, that's actually a pretty interesting topic because as far as I understand, normal people, let's call them people outside of the crypto bubble, consider all the crypto as very risky, very, very risky. So if we tell them, hey guys, you can reduce your risks using decentralized bridges, they will say, okay, risks were like very big. Now they are, no, risks were very, very, very big. Now they are just very, very big. So it's like a nonsense. We just say, hey, very risky asset and reduce the risk just by a tiny fraction again. It sounds as a nonsense for me personally, because
It's like
people
it's
do
like
care
let's
only
use
about their.
decentralized bridge for
Sorry?
USDT. It's like let's use the centralized bridge for USDT. It's like, you know what I mean? It's like a centralized coin on the centralized bridge. It's like, yeah, let's.
So yeah, the point is that Aleksei, you just mentioned that we can reduce the risks with all these decentralized bridges, with all the technologies like gravity, graviton, I don't know, anything else. But at the same time, do people really care about it? Because reducing risks for very risky asset, it sounds like, okay, reducing risk only in one very, very small aspect.
One important thing is who is a user. I mean, most often, so I'm from the developers side, so I'm kind of developer. I have a developers team, etc. And this is how I'm making decisions. Like there is many options. For example, I'm building service for transfers money from one chain to another, for whatever reasons, right? I'm just building this application, and then I'm trying to choose like which technology we have to use. Like which technology as a developers we will trust and take responsibility, because we are taking responsibility between our users and us to provide like less risky service. So if you're a developer, you have one decision making, like you have like decentralization here matters because it's more reliable. I mean, it works almost like every second, every minutes, every day, and at the same time there is less single point of failure. So if you're a developer, you have different criteria about how and which technology you'll use. So this is one important thing. If you're a user, of course you don't care. Most of decisions they are making is because of like hype, and they are listening about this kind of like conformity thing. Like if you are within the community and everyone is buying something, you will do the same. So this is different level of who is a user, and developers, they need and actually they like decentralization. So if you look at many developers chat, they are always arguing about Binance chain, because like all validators is behind the Binance, and it's like this is a thing, because one single point of failure here in terms of who is maintaining the node. But yeah, anyway, it's different users, and for developers it matters. I can say as developer. For users, they don't care. And of course, we can mention that this is less secure, this is not so much secure. But the thing is how to measure the risk. We cannot. Most of DeFi things is actually accumulation of different risks. Like really, if you look at most complex DeFi product, which is like cross-chain and based on different like tokens, etc., you will find that there is like huge probability if something is something fails, the huge chain of failures will happen. So you cannot say that something is less risky in the crypto, because there is not. It's all about experiments, and even if you are staking stable coins, like supposedly like risk-free thing, right? You have a lot of risks, like risk of smart contract, risk of exit scam, risk of whatever, like DPEG of stablecoin for whatever reasons. It was 3 years ago actually with the USDT. And yeah, it's just accumulations of risk, and it's okay right now because it's a bull run. No one cares. Everyone's just making money. But let's see what will happen in the hard times.
Yeah, and also one thing to add. As far as I understand, interchain can make very, very good sense when we will have possibility to call one DApp from one chain, like if we will have DApp to DApp calls from like between different chains.
It's not possible. No, it's not possible.
Sorry?
Unfortunately, it's
yeah,
not possible.
it's not technically fully possible in decentralized manner, but it would make perfect sense, at least for me, because for example, what I see right now is that many blockchains, they just replicate Uniswap or I don't know, Yearn Finance or something like that. They just copy and paste smart contracts code in their blockchain. So we have, I don't know, hundreds of AMMs in different chains right now. But it would be much more interesting if we will have I don't know, dApps on top of Uniswap, for example. If it would be possible to call, to make a swap using Uniswap from Waves dApp, something like that. That's not possible. I truly understand that. I fully understand that, but that makes sense for me. And decentralized dApp calls, that makes sense for me too, because I mean, instead of copying and pasting, you just use what already exists. I think the composition is much better than copy and paste, but not sure that it's going to be possible in the nearest future. And maybe that's the biggest challenge we have to solve before we see like better adoption of interchain, because it will open many doors for developers, firstly for developers, and maybe they will be able to build, I don't know, interesting dApps on top of these mechanics.
I'd like to jump in on that, because I think the issue here is both for the audience, what Jay also said in the beginning, where we're a bunch of people that have seen like the growth of crypto and we're used to running those risks, but we're also used to running the risks for, in most cases, good reasons, whether it's a risk from a development perspective and you're trying to achieve something, or it's from a speculative angle and you just sort of, you know pretty well what the risks are and you're capable of managing them, and the risks don't seem like this very weird, obscure like bundle of, oh, it's decentralized, but I don't trust it, and I'm coming from traditional finance and I have no clue what's going on here. The risks are pretty transparent for us. We know what they are, so we make that gamble of risks versus speculation. But the issue is that the speculative side also is valid on the developer side, because why would you build something that sort of sits on top of, say, Uniswap, or it could be anything really. It could be any different variable where an existing legacy product already serves its role pretty well. Why would you build something on top of that? Because financially speaking, it's currently much more interesting to make not necessarily a bland copy, but to make a copy of an existing product or an existing role in the ecosystem and change a few things, tweak a few parameters in such a way, whether it's on a different chain or whether it's the same, but you're improving on something that exists already, is just financially much more interesting to do so, because as a developer, you can still put yourself in a position where you take up a sizable market share, even though people don't necessarily think it's possible. But we're in a stage where if you were to take Ellipsis as an example, for example, which is kind of like a Curve clone on Binance Smart Chain, they targeted what you said, like the most of the projects are trying to get the audience of Ethereum and then plug them into their own products, sort of as a marketing or growth acquisition tool. They did it perfectly. They just said, here's everyone who has vCurve, who has essentially locked up Curve for X amount of months, years. This is exactly our audience, because we want to create a copy of Curve on Binance Smart Chain. So we're just going to airdrop tokens to all these people. Free money. Everyone's going to look at it and news will spread fast. But then the API is being kept high and some pretty nice incentives of like farming and degenerate farming, but it works. And it's much more interesting to create a copy with a few small parameters tweaked rather than use what's already there and build on top of that. And if you then add the technical challenges of actually doing something like what you suggested, like for example, have an app that's sitting on Waves and then have that be an aggregate of multiple services in whatever chain. And I think probably what I expect is that the financial benefit will keep being the reason why people will make their own copy rather than use other products. But once we get to a stage where we can actually make that transition seamless between those chains, people will do both. They will make an aggregate service of things that already exist, and then also make their own product on top of that, which is still financially interesting. I don't think that we'll see it any other way. I don't think that we'll see something where it's not financially interesting for the developer that's making it, because I mean, everyone still wants to see their product grow. And that's also, the thing is that financially interesting for the developer also means financially interesting for the ecosystem, which means user growth. That's where all the incentives are aligned, and it would maybe be a bit like blunt for me to say, hey, the developer just wants to get rich, but it's the same, because the audience wants to, like, the main reason for doing that is not because, oh, I think that this is a really cool AMM, let me drop in 10 million in this unknown project just because I think it's a great feature. No one does that. People think, I will put something in this project because number go up. And I think we won't necessarily break the mindset status quo that our industry has, because it's growing out of technical innovation aligned with financial ecosystem growth, both for the developers and for the, let's say, user base, and for the backers financially. And that's been the case for years now, and it won't change. So I don't think that we'll see interoperability happen for the sake of interoperability. We'll see it happen because it's financially more interesting than a non-interoperable counterpart.
Yeah, I do fully agree that interoperability, just because of interoperability, it's just like, yeah, nonsense too.
Yeah.
Okay, guys, speaking frankly, we have to finalize our stream because we are almost 15 minutes.
I have one thing.
Sorry?
Excuse me, I just have one thing we haven't mentioned yet.
Yeah, go ahead.
So with the whole this like cross-chain interoperability thing, this thing is actually, it has network effect, and let me explain. So like 3 years ago, then Uniswap launched it. It was like almost nothing liquidity, right, on both sides, and like incredibly high slippage. So it wasn't used by anyone because it was worthless. I mean, no liquidity, no reason for swaps. But the thing is, if you have something which is like connects to two pieces, and the more people join, the more useful it will be. You have network effect, right? So the same here we have in multi-chain, actually. I mean, in multi-chain world, we have same assets issued on different chains, and except of ETH, most of them are not so liquid, right? But the thing is, the more cases you will have, the more chains connected, the more IMMs with those wrap tokens you will have, the more arbitrage opportunity you will have. Which means that if the price of asset is changing on one chain because of the current audience of this chain is actually buying or selling, whatever, you have different price on another chains, right? Which is bringing you the arbitrage opportunity. So, and it works like positive feedback loop. The more arbitrage opportunities, the more arbitrageurs will join, the more volume will be, the more liquidity they will bring. And it will grow slowly in the beginning, but after like, I don't know, a couple of years, same analogy as with Uniswap, you will find that it's not an issue anymore, because most of like popular assets, they're liquid everywhere on most popular chains. And there is like some industry who is making money from arbitrage, and it's like it will solve by itself. And right now it's a good opportunity for like developers teams who gonna start from like, how like I had this issue. I have a developers team, and we're gonna start market making market making business. And the thing is how you can start it. Because most of market making on exchanges is actually really competitive. You cannot compete. It's not so profitable. If you are doing like IMM arbitrage, it's also really competitive. I mean, in terms of how to say front running. I mean, the huge organizations with like incredible amounts of ETH, they can front run any transaction, so you're always losing here. But the new niche here is cross-chain arbitrage, and there is not so many teams who already joined that. But if you look at how like Uniswap started, it was started as almost nothing, but right now it's like, it's a biggest decentralized exchange, and the most liquidity is here. The same thing for cross-chain. It's just my opinion here. It's not like advice, etc. Just look at this. You can start your small but profitable arbitrage business for cross-chain, for same like wrap tokens on different chains. It will generate some income. But the more people will join, the more liquidity will be, the more profit you will have, and the more powerful you will be. So this is one of the advice here, and we're already doing that between different chains. Like Waves and Binance Chain, and we have integration with Avalanche, so we'll do this for Avalanche. And the whole project which I'm working right now is a Graviton, is about that, to incentivize people to move assets, wrap them, and provide some initial liquidity, and after that do arbitrage, because you have arbitrage always if you have the same token on different chains. My two pieces.
Well, actually, arbitrage opportunities is pretty interesting, but the main question here is that we need wrap tokens on different chains, right? And those wrap tokens should be traded on AMMs or exchanges or something like that. And you need the case for all the wrap tokens. So here's again a chicken egg problem, right? Because who's gonna issue the wrap token? Who will maintain, let's call it, the token? Who will be responsible for it? Can it be fully decentralized or not? So there are many open questions for it. So now let's summarize. Actually, the first, I want you guys just to answer one short, simple sentence. I'll ask like a few questions, and I want to hear an answer from each of you. So do you really think that blockchain interoperability is the next big thing? Like, if yes, why?
I cannot say yes, because it's like it was sold already, like 3 years ago with the Polkadot and Cosmos, and I'm not sure that it's like something next big and hype around that, because it's not. It's just technology thing. It's just technology thing. The hype is a bit different. It is into the connecting different ecosystems, not like a technological solution, but more or less like community management solution or something. I mean, if you have the project, they have to be represented on different chains, so they can reach more audience. They can provide more cases for users. And it's not about interoperability, because no one cares. And there is many types of solutions how you can do that. And right now, if you look, for example, at 1inch, 1inch is one of the good example of a project who has like perfectly developed service on both chains, like Ethereum and Binance Chain. And the more chains, the more projects they will join this kind of narratives, and those narratives matter. Not like interoperability, because it's just technological solution for that. But the seamless access for the application from whatever chain you are using, this is the most important thing. And it will not sell itself, because it's like we have to have it, right? It's just technical debt we have to reach. Yeah, same as for DeFi. The DeFi is not like a technology solution. Most often it's like a yield generation approach, and this is like something which is selling. For cross-chain, it's not.
Short. Please keep your answers a little bit shorter.
Okay, sorry.
Stan, Jay, do you have anything to say about like, do you really believe that blockchain interoperability is the next big thing, or I don't know, you don't know?
Maybe not the next big thing, and I'll keep it short, but I think it could trend to something interesting.
Okay.
Let's leave it at that.
Yeah, I'll combine the two answers. I do think that the whole idea of interoperability has been sold already, but I do think it will be a big thing. I don't think that we're there yet. But then while I was listening to your answers, I was remembering conversation that I had with Lasse Clausen, one of the two founders of 1KX, I think somewhere early 2017 in Shanghai, and it always struck me because he said, listen, our investment thesis is pretty simple. We take projects that are really really well versed in their solution of the problem that they're trying to tackle, and the problem is so big, but the solution takes so long that by the time that we've actually realized whether the teams are capable of solving the problem that they claim to solve, by that time we will know when the solution is valid or not. We will have long exited our investment. And that's kind of where we're at with a lot of the projects around interoperability now. Like, yes, it has been sold already and for a couple of years, and there's a few multi-billion-dollar companies that claim to have a solution, but none of them really have a solution yet. So that idea still holds. Like, you can still claim to have a solution for a very big problem, but don't solve it necessarily on paper or in reality. And I do think that we're not yet ready as an industry as a whole to make that transition from paper solutions into real solutions, because we have some real solutions, but they're very clunky, they're very difficult to use if you're not like the self-taught expert. I do think that we will see at some point like interoperability as a real solution that really works in a seamless experience, but we're just not there yet. So will it be the next big thing? It will be a big thing, but maybe not necessarily the next. I think it's much more likely to find the next big ideal to solve that will then take another 3 years until we realize whether we will solve it or not. But by that time, we'll have created a few new billion-dollar paper solution companies. I think that's more likely than the actual real solution that will grow.
Okay, so I think that's the best ending of which is possible for our today's stream. Thank you guys. Thank you for joining. Before we finish, I just want to remind to our listeners that there is a competition, so you can win your egg token. You just have to list all the partners of Waves and Gravity we have mentioned during this stream. So there is a forum. You can find it on YouTube. So you just have to submit a list of partners we have mentioned today during the stream. By the way, you can find the list of partners on Waves Medium or Gravity website, I guess. So good luck with it. Thank you guys again.
One moment now.
Yeah, sure.
Let me mention one important band protocol.
You just want to list all the partners, right?
I already mentioned
just
I already mentioned Sean.
Yeah, just wanna see what else. I don't know. Phantom. Yeah, just project.
Yeah, Binance Smart Chain, Phantom, Avalanche. Yeah, let's just name other projects. Let's name not our partners. Bitcoin.
No, but it's not. They have to check it. By the way.
Okay, yeah. Thank you very much, guys. Thank you for your time, and hope to see you soon again. To our dear listeners, please, if you have any ideas about the next topic we have to discuss, feel free to leave a comment. Feel free to leave, to DM me on Twitter and follow all of us on Twitter. Find us all on Twitter and follow, because all of us post interesting things on Twitter too. So thank you, guys. Have the best day.
Thank you, guys.
Thanks.
Bye-bye.
Thanks. Bye-bye.
Well, the topic was actually very, very hard for me personally. I don't know about you, because on the one hand, it's very big and it's hard to discuss.
It's not so funny as NFTs, right? Because
it's not so fun as NFTs.
Yeah, it's
a bit